Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. The top 5 economic events to watch this week. As a new week begins, here are 5 major economic events that deserve your attention. 1. US core inflation data, Wednesday. On Wednesday, the US will release the Core Personal Consumption Expenditures (PCE) price index, the Federal Reserve's key measure of inflation. Wall Street predicts a 2.3% year-over-year increase for October. However, given recent labor and consumer data pointing to a strong economy, inflation might remain stubbornly high, potentially exceeding expectations. If the figure surpasses 2.3%, it could unsettle investors worried about the Fed delaying its anticipated December rate cut of 25 basis points. Still, some analysts argue that even a higher-than-expected PCE won't necessarily derail the Fed's plans, as November's inflation data, due before the December 17th to 18th Fed meeting, may hold more sway. Should Wednesday's data meet or underperform expectations, Wall Street could breathe a sigh of relief. 2. Black Friday. Friday? This Friday marks Black Friday, the biggest shopping day in the US, and the start of the holiday shopping season. Beyond its retail importance, Black Friday sets the tone for the festive season, with Thanksgiving, Christmas, and other celebrations just around the corner. For Wall Street, Black Friday's sales data offers critical insights into consumer spending and economic health. Last week, retail giants Walmart and Target gave conflicting forecasts for the holiday season, leaving investors anxious to see whether consumer demand remains robust. 3. The Trump rally of momentum. Since November 5th, US markets have been experiencing what many call a Trump rally, driven by optimism over Donald Trump's upcoming presidency and policy outlook. Although this momentum has slightly faded, markets will closely monitor whether it can sustain its trajectory or taper off further. Analysts widely agree that while the excitement may have cooled, it's not over yet. For Eurozone inflation data, Friday. The Eurozone will release its inflation figures on Friday. Inflation has hovered around 2%, with October showing a slight rebound above that mark. This week's data will help clarify whether the Eurozone is edging toward deflation, especially amid growing concerns of an economic slowdown. The report will also influence expectations for the European Central Bank's likely 25 basis point rate cut in December, which would mark its 4th rate cut this year. Unlike the Federal Reserve, the ECB has been more aggressive in its easing measures. 5. China's November PMI data, Friday evening. On Friday evening, China's National Bureau of Statistics will release the Purchasing Managers' Index, PMI, for November, covering manufacturing, services, and composite sectors. This data is critical for assessing the impact of China's recent economic stimulus measures and determining whether the government's 5% GDP growth target for the year is achievable. While structural indicators are key to evaluating economic health, some analysts suspect the official GDP figure will ultimately align with government expectations, regardless of underlying realities. Why do we share weekly economic previews? A quick note on why we provide these weekly previews. For younger viewers and professionals, staying informed about key economic events can significantly impact how you prepare for challenges, such as exams, interviews, or career decisions. Studies suggest that priming your brain with relevant concepts beforehand, rather than entering with a blank slate, can improve outcomes. For instance, if you're preparing for a biology exam, revisiting key concepts in advance could give you a mental edge. Of course, this approach isn't one size fits all, and we welcome your thoughts in the comments. How do you prepare for challenges? With a clear mind or a prep brain? Let us know. The next thing we're focusing on is Donald Trump Jr.'s key role in shaping Trump's controversial cabinet. A recent Reuters report sheds light on an intriguing development. Donald Trump Jr., often referred to as the Don Jr., is playing a pivotal role in helping his father assemble what many are calling one of the most controversial cabinets in modern US history. While names like Elon Musk have been floated in the media as influential figures in Trump's administration-building efforts, insiders suggest that Don Jr. has actually emerged as the most impactful voice in the process. The insider's influence. 6 sources familiar with Trump Jr.'s role describe him as a trusted advisor during the transition period. His influence spans from endorsing candidates like Senator J.D. Vance as a potential running mate to reportedly blocking figures such as former Secretary of State Mike Pompeo from joining the cabinet. Although Don Jr. won't hold a formal political position, he is expected to contribute strategically from outside the White House. He plans to join a conservative venture capital fund, 1789 Capital, while continuing to host his politically driven podcast to support candidates aligned with his father's brand. This dual role allows him to shape Trump's policies and political alliances without becoming part of the formal administration. Comparing Don Jr. to Ivanka and Jared. Don Jr.'s role marks a departure from the approach taken by Ivanka Trump and Jared Kushner during Trump's first term, when they held official White House positions. Unlike them, Don Jr. will not participate in day-to-day government operations. However, his strategic influence is arguably even greater, positioning him as a key advisor and tactician for his father. Don Jr. has prioritized loyalty to his father above all else, seeking candidates who align with a populist, anti-establishment worldview. His focus on protectionist economic policies and reducing overseas interventions reflects the ideological shift he is pushing within Trump's circle. A mixed success rate. Despite his strong influence, not all of Don Jr.'s recommendations have been accepted. For example, he advocated for his close friend, former ambassador to Germany Richard Grenell, to become Secretary of State, but his father ultimately chose Senator Marco Rubio, whose internationalist views Don Jr. opposes. Two of Don Jr.'s preferred nominees, Robert F. Kennedy Jr. for Surgeon General and Tulsi Gabbard for Director of National Intelligence, are expected to face intense confirmation battles in the Senate. These nominations underscore the controversial nature of Trump's cabinet picks and the deep ideological divides they represent. A new era of Trump politics. Don Jr.'s growing role signals a shift in how Trump's inner circle operates. While Ivanka and Jared once embodied a more polished, traditional advisory presence, Don Jr. brings a grassroots, hardline approach that resonates with Trump's base. He is shaping a cabinet that reflects not just loyalty but a distinct break from the traditionalist policies of prior administrations. During a recent interview with Fox News, Don Jr. confidently stated, "This time, we actually know what we're doing. It's about surrounding my father with capable, loyal people." This statement highlights his intent to shape a cohesive and ideologically aligned team to implement Trump's vision. The bigger picture. This report is a reminder that family dynamics remain a cornerstone of Trump's political strategy. While media coverage has focused on allies like Elon Musk or other high-profile figures, Reuters makes it clear that Don Jr.'s role is central to the formation of this cabinet. For Trump supporters, this signals a continuation of the loyalty-driven governance style that defined his first term. For critics, it raises questions about the implications of such influence for American politics and policy. Regardless of perspective, Don Jr.'s impact is undeniable. As Trump's second presidency takes shape, understanding this dynamic will be key to analyzing the administration's future direction. Thirdly, let's get to an interesting thing: how two historians revolutionized media, lessons from a global podcast phenomenon. A fascinating piece from the Wall Street Journal has caught the attention of many readers, delving into the power shift from traditional media to new media in the battle for influence during this election season. The report focuses on a globally celebrated podcast, The Rest is History, hosted by two historians who've redefined how history is told and how new media captivates audiences in ways traditional outlets struggle to match. Why this podcast stands out. Unlike traditional history shows, The Rest is History combines humor, creativity, and unconventional perspectives to engage audiences. The hosts explore topics with fresh angles, challenging conventional narratives. For instance, did you know Napoleon Bonaparte, the symbol of French patriotism, delivered stirring speeches with a heavy Italian accent, reflecting his Tuscan roots? Was ancient Roman historian Tacitus an early woke thinker? Could a misplaced pair of shoes at a yacht party have contributed to Kaiser Wilhelm II's missteps leading to World War I? These quirky takes transform historical events into engaging stories that resonate even with those indifferent to history. Their storytelling captures the imagination of Gen Z audiences, and their live shows evoke the energy of rock concerts. From podcasts to sold-out venues, the podcast's popularity has transcended the digital world. In October, the duo sold out London's Royal Albert Hall, where fans from around the globe gathered to hear their history of Mozart and Beethoven, enhanced by live orchestral performances. This multimedia approach is a testament to how new media creators innovate to keep their audiences engaged. With each host reportedly earning $100,000 a month, their success showcases the potential of new media platforms to rival, and even surpass, the reach and revenue of traditional media outlets. The revolution in media. This podcast's success isn't just about storytelling, it reflects a broader trend in the media landscape. Traditional media, often bogged down by rigid formats and slower production cycles, struggles to compete with the agility, creativity, and audience-first mindset of new media. Podcasts, YouTube channels, and other digital platforms are democratizing content creation, allowing individuals to bypass gatekeepers and connect directly with audiences. The lesson here is clear: dismissing new media as inferior or less serious is a losing strategy. Established outlets that fail to adapt risk irrelevance in a rapidly changing media environment. A call to action. For those inspired by this revolution, consider exploring your own creative ventures. Whether it's launching a YouTube channel or starting a podcast, the tools and platforms are accessible, and the potential for growth is enormous. If you're interested but unsure where to start, I'm happy to offer tips and guidance based on my own experiences and observations. This isn't just a story about two historians or a podcast, it's a wake-up call for anyone passionate about storytelling in the digital age. Traditional media may have its strengths, but the new media revolution is reshaping how we consume, share, and connect with information, and the opportunities are limitless. Finally, let's focus on a message from the tech sector. Is Google Chrome's $20 billion valuation at risk? A closer look at DOJ's antitrust push. A recent Bloomberg report has reignited debate in the tech world, suggesting that Google's Chrome browser could be sold for a staggering $20 billion if the U.S. Department of Justice, DOJ, succeeds in its antitrust campaign. With over 3 billion monthly active users, Chrome is a cornerstone of Google's dominance in the tech industry, and forcing its sale would mark a historic blow to one of the world's largest technology companies. The DOJ's bold move against Google. The DOJ has reportedly urged a federal judge to mandate Google's parent company, Alphabet, to sell Chrome as part of a broader antitrust effort. This aligns with the Biden administration's long-standing ambition to curb the influence of big tech by breaking up monopolistic practices and fostering competition. However, with the administration nearing the end of its term, the practical likelihood of this measure materializing remains questionable. A political context worth noting. Antitrust efforts against big tech have been a talking point since President Biden took office, but the results so far have been underwhelming. While these initiatives make headlines, there has been little tangible progress toward breaking up major companies like Google, Amazon, or Meta. Now, with the current administration running out of time, this push to force the sale of Chrome may carry more symbolic weight than actual urgency. The odds of such a move being finalized before the end of Biden's term seem slim. Furthermore, as we discussed yesterday, Donald Trump's re-election could drastically change the regulatory landscape. Trump has already reached out to Google's founders and is likely to pursue a more business-friendly, deregulation-focused approach, making a breakup even less likely under his administration. The Pelosi stock trading a parallel. This situation brings to mind another hot topic, the so-called "follow Pelosi" meme. When the Biden administration came into power, many believed Democrats would crack down on big tech, prompting fears that antitrust action would negatively impact these companies' stock prices. Yet, Nancy Pelosi and her husband famously invested in these very companies, taking advantage of insider knowledge and reaping substantial profits as their stocks surged. This reveals a broader truth: what politicians say and what they do often diverge significantly. While public rhetoric about breaking up big tech might stir media frenzy, private financial decisions often tell a different story about where things are headed. What this means for Chrome and Google. For now, Chrome's future within Google's ecosystem seems secure, despite the DOJ's push. The sale of Chrome would undoubtedly reshape the browser market, but the complex legal and political hurdles make it unlikely to happen anytime soon. As such, those following this story should remain skeptical of immediate outcomes. The takeaway. This case highlights the symbolic value of antitrust campaigns in shaping public perception, even when practical results are limited. For those interested in tech, investing, or politics, it's essential to look beyond the headlines and examine the broader context. Whether it's antitrust action or political trading strategies, understanding the gap between words and actions is key to staying ahead in a rapidly changing landscape. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.